So good evening, everyone. To people joining on Instagram and those joining on YouTube Live, welcome to Crypto Pulse Weekly, where we take a cursory look at the events in the cryptocurrency markets. As I promised in the last two sessions, that I'm going to make this sessions shorter than the previous season. I'm going to try as much as possible to stick to that. And that's the reason why I've not been preparing any slides because I don't want to go into long running talks. So I'm just going to pick one or two themes um, of what's happening in the market, and I'm going to talk about it. The first thing I wanted to talk about today was the crash of the pounds, as witnessed by us during the week. By the way, if you can hear some background noise of kids shouting in the background, I have some of my nephews visiting from outside the country, so my house is pretty much full. Even though I'm locked up where I am, you might still be able to hear some background noise of children running around. Just understand that I'm in a full house at the moment. So, as I was saying, during this last week, we witnessed a crash, a 40-year, once in a 40-year crash of the pounds. And a number of people were, of course, everybody was worried. The markets were worried, and that's why we had to sell off. But much more important than that, we should look at what's not being said versus what's being said. What's being said is okay, we need to take this heat because we need to stimulate the economy. At the same time, hold on a second, please. Oh, that's interesting. Please give me a second to restart my Instagram live. So what happened was, apologies for those guys who got caught up on Instagram live. There was a song that was playing in the background uh, by Nigerian artists, and I think that song got its way onto the Instagram live, and all of a sudden I get a violation warning from Instagram, and my Instagram like gets shut down. Anyways, as I was saying, we witnessed a crash in the pounds that we've not seen in a while, and for my people who are into crypto trading, that's a massive, massive dump, like very massive dump. But understandably well, two things are now very clear. One, in the short term, the dollar is going to be stronger than the pounds. We've already seen that happen to the euro. I think it's the dollar's turn now to witness the whipsaw. So we're going to see a much weaker pound sterling going into the next few months and the next year. How does that affect Bitcoin? Not really, because Bitcoin is controlled by the US dollar and the US dollar index. As I've said many times on this call, that the DXY is directly proportional to the price of Bitcoin. And I've said this a number of times. I don't know how many people remember when I was giving the example about when the Feds in the first quarter of the year started hiking rates. At the point where they started talking about it was the point where Bitcoin started taking a hit. So it's not unexpected that the market is reacting the way it is. The only thing is that I think the world economy will suffer. Um, Somebody wants to be on my live Instagram. Just please give me a second. I think the world economy will suffer in the short term because what's happening is the US dollar is strengthening itself by I don't want to say by design, but what's happening is that because the US dollar wants to prevent a situation where it becomes weak because of overinflation, they're mopping up everything that's available on the markets in terms of US dollar. Now, that mopping up activity results in the draining of funds from the equities markets. And I've explained this cycle many times before. Because the equities markets get drained of funds, anything that's related to stock and to crypto automatically get drained of funds. And these are not just funds in the millions of dollars. These are funds in the hundreds of billions, really, that we're talking about. Because the biggest money marketers, the money managers, are always looking for the easiest way to escape the hurdle rate. The hurdle rate is a term that is used to describe the cost of inflation. To describe the cost of inflation over a period of 12 months. Sorry, please give me a second. So, Musumola, please can you mute your mic because it's making. I don't know if it's reflecting on. Yeah, thank you. It's giving feedback. I'm not sure if it's reflecting on Instagram, but just in case. So, because these big banks and these big money managers, they can't just warehouse hundreds of billions of dollars over the course of the year because inflation will catch up with it. So, to take cater for inflation, they look for vehicles year on year that they can push these things into that will ensure that that money still holds value at the end of the calendar year. So, they look into equities markets, which is the stock. They look into bonds markets, which is the long-term government debts. And usually, bond market provides relatively free money at a stable interest, usually 1%, 2%, 0.5, 1.5%, depending on what the rate is. Understand that the bond market is essentially the government selling its debts or giving promissory notes on its debts and monetizing or commoditizing the government debts and then printing more money for anybody that buys into that debt. That's exactly what bonds are. So if you're into treasury bills in Nigeria, for instance, understand that what you're doing is you're buying the government debts in the short term with the intention that they're going to pay you some interest on it. So these big money managers move their money anywhere they see the easiest line of resistance. So what's happening now since the beginning of the year essentially is that money has moved from the equities market, which is stock market, where there was a boom, and has moved into the bonds market because of the US dollars quantitative tightening or rate hike, as we'll say. So, because of this dynamic, as I always say, we're going to progressively see money move out of the stock market and the prices come down and down and down until the Fed, which is the central bank of the US, comes to the conclusion that okay, we have enough stability in supply now. We can start pumping back money. However, there are unintended consequences, just as there were unintended consequences for pumping money out during COVID. The unintended consequences of mopping up funds now is that you're going to have recession or depression, as the case may be. I mean, recession is when you have two back to back quarters of decreasing GDP. I think we're going to have a lot more than that because you have depression or you have recession, then there is inflation. And inflation cannot continue. Otherwise, there will be a run on the bank and the economy will collapse completely. So, what the central bank of the US is doing is trying to prevent that inflation by mopping up any additional funds in the system. That results in a rate hike that results in everything else we are seeing. The mortgage rates going up, the lending rates going up, people people getting bigger bills because the interest rates are higher. And of course, what you call the last economic problem that we had in 2008, um, that one was that one was an avalanche that was triggered eventually because the top got too heavy. This one was a man-made avalanche, quote and unquote, in that it's been orchestrated by the central banks to make sure that they don't go into hyperinflation. And because of that, we might have unintended consequences that they might not be able to handle. So for now, what I can say on a macroeconomic level is that we can expect that we will be in a downward trending economic pattern for the next 1 or 2 quarters. This quarter we're getting into tomorrow, that's the fourth quarter. and at least the next quarter, you would observe that the noise about recession is being muffled in the media so far, even though we've been in recession for more than, I would say, more than 4 months now. But it's been muffled because when you talk about recession, people get into frenzy, and the market goes into a hysteria, and there's a sell-off and all that. But I think we're not going to see the end of the full-blown effect until January. By January, we will have seen 2 quarters. So this quarter we're finishing now, we'll have the results. Then the next quarter we'll have the results in January as well. So by that time, the Feds, which are the central banks of the US, will have enough data to know whether the interest rate can be held, meaning inflation has subsided, or they still need to do other things. I think that at that point in time, they'll probably look to stabilize for a while before considering other things. Where does this put crypto? And why am I talking about all this? Because you see, everything in the world is connected. I don't want to go into philosophy or into quantum physics, but if you understand those two fields of study a bit, you understand that everything is connected with everything. So there is nothing that happens, as it were, in isolation. So we don't have the downward trend that we have in Bitcoin now in isolation. No, it's because we have excuse me, please. It's because we have it's because we have money being mopped up from the equities market into the bond market, or what you call fixed income, that we have the situation we have right now. So how do you position yourself as somebody who is either looking to invest in the market, has invested in the market and has lost money, or is just trying to find out what this is all about? First, if you've invested into the market and have lost money, understand that your loss is temporal if you've not sold out. For most people, they've gotten angry and they've sold their stakes, and I know I can't do this anymore. I can't handle the volatility. For others, they decide not to look at their portfolio. You'll be better off. But over and above that, as I always say, you need to come up with a strategic plan on how you averaging on your position. And the reason you need to do that is because within the next 6 months will be the lowest prices you have over the next 2 or 3 years. And if you do not capitalize on the prices that you have, and this is just not for crypto, this is also for stocks as well. If you do not capitalize on this moment, in the coming moments, you'll be talking about other people getting lucky. There's no luck there. There's a scripture in the Bible that says that time and chance is what happens to men, and that people are not at superlative advantages over each other, but like time and chance gives people opportunities to shine. That's my paraphrasing of that scripture. So time and chance, scientifically proven by the way, is what has made somebody a billionaire and the other person a millionaire. If you read the book Outliers: The Story of Success by Malcolm Gladwell, it talks about how the guys that were born in the 1800s, if they weren't born in that period of time, they would never have been able to achieve superlative success financially, because they were born at a time when economies were just picking up, technologies were just picking up. So the opportunities that were available to them at that time were unique opportunities to that space. So if you weren't born in that period, you couldn't capitalize on that opportunity. And it goes without saying as well, if you weren't born around the time Bill Gates was born, you could never have capitalized the opportunity for building the personal computers, because you will not be old enough. Neither will you have, the kind of link that he had to IBM to set him up to produce his first software application. So understand that time has given us an opportunity to be where we are today. And we need to be circumspect and understand that, like I always say, this is a once in a generation event that is happening and unfolding before our eyes. I don't want to say it's happening in slow mo. It's not happening in slow mo. It's happening in real time. but we don't appreciate it because we are living in it. And I say this all the time. If the story of this few years between 2000 and let's say 2040 or 2030, let's say 2040, if the story of those 40 years will be told in another 100 years, there will be so much noise about how that was the best time in the world to achieve supernormal profits and exceptional success because there was just opportunity on a scale that it had never happened before. So for people who are already invested in digital asset and crypto, I would say to you that this is the time to double down, especially when it comes to things like Bitcoin, Ethereum, BNB, which is Binance Coin, or Solana. And the reason I mentioned those four, I can mention XRP and Doge, but XRP is has become more of a cult-like token because it did make a lot of millionaires in the 2017 2016 bull run. Believe me, so many people. XRP did 180,000% in gains in that bull run. So you can't blame people for wanting to hold on to the coin, thinking that that phenomenon can repeat itself. But it did happen at the time. But there are other tokens that are in that category today that people don't even know about. But Bitcoin, Ethereum, Binance Coin, Solana, Cardano. In fact, I think I'll pick Polkadot over Cardano. Those are major ecosystem coins or tokens that will see mega gains in the coming bull run. And I can give you the thesis on why each of these tokens that I mentioned. So if you don't want to do anything, if you want to go the lazy route and just you don't want to worry yourself, you're looking for the easy hack. I just gave you the easy hack. Bitcoin, Ethereum, BNB, Solana, and Polkadot. Cardano, maybe not. But those five, I'm sure. I can give you another one, six to make it six. Matic, but Matic might still come down a little more than it is right now. Those five, in addition to Matic, are already lined up for explosive growth in the next bull run. So, for the purpose of people who are joining for the first time and purpose of some of you who are already here before, I will talk about why we have these peaks and troughs and why it almost looks like everything is pre-calculated or pre-orchestrated. Bitcoin was created just on the cusp of the financial crisis in 2008. The first day, in fact, the first line of code that was written into the blockchain of Bitcoin quoted the Bank of England's chairman, or you could call it the central bank chief at the time. I can't remember his name now. And what they decided to do in pumping money to support the banks so that the banks will not fail. And what was written in the codes for Bitcoin is that the issuance would drop after a number of blocks. Now, those number of blocks almost approximates itself to about 48 months, between 40 and 48 months. Every 40 to 48 months, the block size reward drops, meaning the rate of production of Bitcoin drops. For those who don't know as well, Bitcoin has a finite production that can only be 21 million, and out of that 21 million, we're already over 18 million produced. Every 40 to 48 months, the production price or the production rate drops. That has an effect on two things. Once, it has an effect on overall supply, which automatically affects the price. Two, it also affects the difficulty that the computing power or the computer needs to go through to produce any Bitcoin for any block reward. So this, to a very large extent, has driven the trough and the peaks of the price of crypto. You can go back to 2016, which was the last halving, or 2020, which was the last halving. And as a matter of fact, I started this channel just before the last halving in May 2020. And I found out that, one, the halving triggers a series of, it's almost like a cascade. Like, Imagine, those people that set up what you call dominoes, and then you tap one of them, then it keeps rolling and piling on each other. Then you have this massive cascade of events that happen. Every time Bitcoin halves, it triggers a cascade of events that triggers activities in the world of crypto. Let me use that word. Before 2016, it wasn't known. People didn't really know about this phenomenon. I think it came into mainstream in 2017, 2018. That was when people really realized that, oh, there's something like this that's happening. And it's taking the attention of the institutional investors. So because the institutional investors know that every 40 to 48 months, the production rate will drop, will produce, provides an opportunity to get in on the market, to buy the rumor and sell the news. So partly because of that, and partly because of the technicalities that have been built into the Bitcoin algorithm, the price shoots up. So the last time in 2013, the price was around 1,006, 1,003. In 2017, yeah, 2017, 2018, the price went to 19,000, almost 20,000. Last year, the price went to almost 70,000. As a matter of fact, just to put it in perspective, before last year, everybody thought that the highest price that Bitcoin was going to get to was probably going to be 40 or 50,000, because the previous high was around 20,000. So everybody was speculating, Bitcoin can't go beyond 50,000. There's not enough money, there's not enough market capitalization. But it went over and beyond that, and it almost did 70,000. By the time it got to 50,000, actually, people started thinking maybe it was going to go to 100,000. But I think the institutional investors decided to exit the market before it all started coming down. So how do we position for this? Like I said, those five tokens that I've mentioned are guaranteed. Like, you are guaranteed to make returns on them. If you start buying now, you are guaranteed to make returns on them. There is a number of arguments within the development community, or well, not arguments, speculation within the development community, that the next halving will not wait until the beginning of 2024. That will happen at the end of next year. Whichever case, or whenever it happens, one thing is sure that operates as clockwork. 6 to 9 months after the halving of Bitcoin, the price just shoots up astronomically. When the price shoots up astronomically, the overall market capitalization of crypto goes up astronomically as well. And then you see tokens that are selling for nothing, literally nothing. I've seen this with my eyes. I've seen this with my eyes, that tokens that were completely worthless started selling for serious amount of money. I had a token called Shiba. Before Shiba Inu became very popular, somebody just I was in a subscription group, and I had the token. I bought the token at the time. I didn't take it seriously, but just because it was part of those that have been mentioned, I bought it. My total exposure at that time probably would have been around maybe £500 or £800, something very minimal. But when Shiba Inu started pumping, I didn't even notice. It was later when I was sort of doing an after action review. That was when I discovered that on that 500, between 500 and £900 investment, that Shiba Inu actually had produced up to 50K at some point within the space of 9 months. It wasn't even up to 9 months, really. And I was thinking to myself that, I wasn't even taking it seriously. I wasn't considering it, because it was a meme token. It didn't have any use case. It was just for fun. And before you know it, the price went through the roof. The reason the price could go through the roof is because the price of Bitcoin drives up the market capitalization of the crypto markets. And when it drives it up, when the big money makes money from the appreciation of the price of Bitcoin, they can't exit on the price of Bitcoin, because then the market will just crash down the same way it went up. So the way it's been done is that Bitcoin gains will now cascade into altcoin gains. Then the altcoin gains will cascade into stablecoin gains, and then they're able to exit the market. Well, I knew this. I knew this before the last market, but it's something for you to know something, and it's another thing for you to actually see it happen. like they say, everybody can play until they give you the ball and put you on the pitch. Then you know whether you can the ideas you have in your head are real, or you can really play. So what is going to happen in the next 2 years is it's almost with scientific accuracy. The price of Bitcoin will probably go to 100K or 120, and then the price of altcoins will go crazy. I think that Ethereum will outperform Bitcoin by a factor of 2 to 3 in this particular run because Ethereum has now become an institutional asset. How do I mean? Ethereum upgrades, the Ethereum upgrade that happened in September that moved Ethereum from proof of work algorithm to proof of stake. I'll talk about proof of work algorithm and proof of stake next week. I think I want to finish early today. But that movement from proof of work to proof of stake means that Ethereum is now regarded as a green, quote unquote, green cryptocurrency worthy of institutional investment. And it has purportedly reduced Ethereum carbon footprint by 99%. So what that means is it's going to feed into the ESG agenda a lot, and then it's going to get a lot of attention. And because Ethereum is like the crude oil of crypto, while Bitcoin is like the gold of crypto, I think Ethereum is going to see a lot of ubiquitous manifestations in the next few years, and that will drive the price significantly high. That is not to say that the price of Ethereum is not going to come down below what it is already right now. So if you're on Zoom, you notice that the price of Ethereum is now around 1,348. My projection is that it will get to 1,002 in the first instance. Then it will get to around 1,000. If the quantitative the quantitative tightening continues, it will drop below 1,000 to around 478. And I can see that on the weekly charts, 477.9, so 478, as I said. So I believe that's the final destination and that's the bottom for the bear markets. My analysis on this particular one, this particular analysis has been actually accurate up until now, and I don't think it's going to change significantly. I think we're going to see Ethereum around 500. I'm definitely going to be buying Ethereum once it drops to 500 because it means that the bottom is near. One of my friends will say, "Why do you always want to time the bottom?" It's not really about timing the bottom. It's also about getting the most value for your money. So for me, when I see Ethereum at these levels, at around 490, obviously the end or the bottom is near, or the bottom is in, as they say. Now, for the dollar index has been going crazy. Dollar index is the epitome of the strength, or is the representation of the strength of the dollar. Now, it's been going crazy for a while, and now it's gone into correction, as you can see on the chart on Zoom. It's gone into correction. By the way, if you're on Instagram, you can join on YouTube Live Crypto Pulse Weekly. You see the Zoom rendering as well. The price of DXY has peaked out at 115, I think, and is now at 112. My expectation is that before we see any significant uptake in DXY, it might take some correction. Please give me a second. That correction may bring us back to 102. If the dollar starts coming down, automatically Bitcoin starts going up. I think I've explained this over and over and over and over and over again. The Bitcoin price is inversely proportional to the strength of the dollar. It's not like the Bitcoin is completely competing with the dollar, but it's just that there are things that are tied to there are things that are tied to the price of the dollar that affects the behavior of Bitcoin. So I expect that if the dollar starts coming down right now, yeah, it looks like an oversold situation, and technically speaking, even on the weekly, it looks like we might be seeing the peak of the strength of the dollar. But that's it's still up to the Fed. If they feel that they need to do some more quantitative tightening, we're still going to see further growth in the strength of the dollar. The strength of the dollar is partly responsible for the sell-off you saw in the pounds, by the way. It's not just because people didn't have confidence in the market. The fact that there was so much strength aggregating to the dollar when the pound was in an indeterminate level also meant that people were selling off on their pounds. So if you wanted to buy pounds, I think now is a good time to buy. Well, it's already too late actually, because I think after it dropped to 1.03 on that day against the dollar, it jacked back up to 1.07. So I think it's around 1.09 now. Dollar used to be 2.5 to the pounds at the peak of it before the 2008 financial crisis. I think the pound never recovered after that point in time. Anyways, um, because of the way the US dollar is behaving now, I'm suspecting. So there are three things I look at. I look at the US dollar index. I look at the S&P 500, which is the stock market index, and I look at the price of Bitcoin. S&P 500 and Bitcoin price go in the same direction. US dollar go the opposite direction. So anytime you see US dollar misbehaving and going strong, know that there is no room for Bitcoin or the stock market to progress. So as you can see on my screen, S&P 500, S&P 500 has been dropping. Yeah, still, I mean, literally in a free fall. I had this descending, what do you call it, descending wedge pattern. It's still in a free fall. So for people in the stock market, the stock indexes, I don't think we've even reached the bottom yet for the stock market. But where the US dollar is right now, it could stay there for a while, and the stock market will still keep dropping because it's in the period of almost like 9 months, the dollar has gained so much strength that it's literally sucked the life out of every other thing. So it will take a while. That's what I mean is it will take a while for the other asset classes to recover, even if the US dollar stops appreciating. Somebody asked a question about Luna. Is Luna done? I'll read out the question. Is Luna done, or is there any hope of rebounding anytime? I think you should take your mind off Luna. I lost a lot of money on Luna, it's insane amount of money, but I think you should take your mind off Luna. There are other opportunities in the market. To be honest, I don't think Luna is coming back. I think it's going to be a shit coin that guys are just going to use to pump and dump. And I give you my thesis on this. The reason is that one, the founder is no longer the one in control of the foundation that runs tokens. I don't know if you know that. The developer voted him out. So it means that whatever is happening there, he's not going to be involved. He was a technical brainchild of the foundation. There was another guy who was an economist that left the foundation last year. So I don't think it has the same, that thing you call the founder's DNA. I don't think it has the same, founder's juice that you used to have. So I don't think there's anything special. Will there be other people that will come up with algorithmic stable coins in the next few months? Definitely. At least one will be out. Um, the reason this one's failed, to be honest, is not just because they didn't have real life assets as collateral. We also need to be conscious of the bigger macroeconomic picture. One of which is the war in Ukraine and the overall effect on the global markets. If there was no war in Ukraine, for instance, I wouldn't think that we'll be in as a much bigger mess with the algorithmic stablecoins as we have, because there won't be incentive for people to sell off. One, if we didn't have this hyperinflation or almost hyperinflation that we have with the US dollar causing the rate hikes, you probably not have the equities market suffering so much losses. In which case, again, money will not be bleeding out of the stock and crypto market. But be that as it may, you can't change that. And because you can't change that, everybody now is on. I mean, the amount of money lost with Luna was $60 billion. That's insane money. So it's not going to be easy for people to repose the same level of trust, regardless, no matter what they call it, no matter what fancy solutions they come up with. That trust cannot be regained. So personally, only deal with Luna the amount of money you think you can lose. I know some people on the call are speculating with Lunsi and Luna. More grease to your elbows. You know yourself. You know yourself. But just play with money you're sure you can afford to lose, because as well it's a zombie project, to be honest. So I hope I answered your your question well, Mr. Badineko. So the last thing I wanted to talk about today was just some interesting news around some of the crypto companies. So you're probably aware that Celsius is insolvent, and they have their case in court. I understand that FTX is trying to buy them out. FTX is the, I don't know how to describe it. FTX is a newcomer cryptocurrency exchange. It's I think its headquarters in either Cayman Island or Bahamas, but it's largely rooted in the US. It's headed by a very young man called Mark Friedman. So that they're positioning to buy Celsius, and I think, I mean, most of the companies that have gone into problems. So Celsius, Nexo was on the verge. What's in these other guys? There was these other guys that were into DeFi staking as well. Most of them are going to get bought up through these new companies with the big boys at the back. Big boys like Grayscale, BlackRock, and Goldman Sachs of this world. They're going to get bought up. So don't get it twisted to think that crypto is going away, or Bitcoin is going to zero. The truth of the matter is that even though the prices are crashing, the big boys are buying it up at the back. So even though you're not seeing any effect on the market, so they're buying up the companies that are providing value in the space. So when the price starts to come back, they made more gains essentially than just speculating on the price, which is a bigger play. So we see that happening. There have been a lot of positioning to buy up, the different insolvent crypto companies. The other news was MicroStrategy. I think MicroStrategy is going to go into. I think they're going to go into payments, because I see that they're hiring for a lightning engineer roles. So to explain who and what MicroStrategy does. MicroStrategy is a business analytics company based in the United States. Very successful. Original market capitalization pre 2021 was around 1.52, yeah, barely up to 2 billion. But then the CEO at the time, a guy named by going by the name Michael Saylor, said they went into crisis because of COVID, and because they always had a $500 million emergency fund on hand. They always had it as their standard policy. They had a problem because they had slush fund in excess of 600 billion, and all of a sudden they realized that fund was not going to grow in 2020 and probably 2021 if they didn't do something about it. So whilst they were trying to find a solution to it, was when he discovered Bitcoin, and then they started buying Bitcoin. Two things happened to the company when they started buying Bitcoin. The price initially dropped. Their stock, because a publicly quoted company in the United States, then the price of their stock started going up. In 2020, the price of MicroStrategy stocks outperformed both S&P and Nasdaq, and their valuation went from less than 2 billion to almost like 6 billion or 7 billion dollars within the space of 24 months. The man is a firm believer in the principles of Bitcoin, and is one of those people that are uniquely placed, because when you have cross-disciplinary knowledge, it sort of makes you to see the world in a different perspective, and I can relate to that a bit. So the man is a computer scientist. He went to school to study computer science. He's a computer engineer. Then he's a founder and a businessman. So he's been involved with corporate finance and financial accounting at the corporate level for an extensive period of time. He's run the company for over 30 years before, in addition to taking it public. So he's able to see both the financial, the technological, and the business part of how Bitcoin actually impacts the corporate world. And they were the first set of people to start adding Bitcoin to their balance sheet. By the way, if you have if your company is looking to get exposure into crypto and you don't know how to do it, my company here in the UK provides services for you. We can do a free assessment for you to understand where you are in terms of your financial position and advise you on how you can leverage on the opportunities in crypto to gain exposure of Bitcoin and crypto assets on your balance sheet. It's one of the services one of my companies provides in the UK. I don't mention it often. I think I should start mentioning it because I think there's an opportunity there for companies to actually leverage their balance sheets with this opportunity that blockchain and digital assets provide. So back to MicroStrategy. So MicroStrategy started buying Bitcoin. They didn't care. They were just buying it at any price that it was available. I think right now they have over 120,000 Bitcoin. Probably the second or the third largest company that holds the most Bitcoin. And I mean, they've come after a lot of criticism and everything. But when you understand the man's position, so the man has moved from being CEO to chairman now, so that he can face the Bitcoin strategy properly. But when you understand the man's position as a physicist, as a scientist, and as a businessman, then you understand that this is not just a speculative asset. And I say this all the time, that the reason we're not cognizant of what is happening before our eyes is because we're right in the middle of it. But what's happening before our eyes is like an interstellar event, like once in a universe event. Like it's really out of this world. But it's not apparent because we're right in the middle of it. So we can't see it. But what's happening is actually of extreme importance to global monetary order. I'm choosing my word. Global monetary order, global economic order, and the democratization of capital. It's never going to remain the same. After this decade, it's never going to remain the same again. Just the same way when printing press came and books started to become available to everybody, all of a sudden, people started noticing cracks in all the lies they had been told by the church and the monarchies. And then, Europe went into war for hundreds of years because of that. So there will be a lot of turmoil by the reason of these three things I've told you. So understand that we need to position ourselves and look at the bigger picture. Because of what is happening now, capital is going to be democratized. It might not be completely transformational in that it might not happen that the whole world become completely democratized because, as you know, there are incumbents that represent the establishment who they're making money from the status quo. So if you talk about banks, for instance, banks take your money. They're the ones that tell you to save. They take your money, they loan it back to other guys for interest in multiple digits. They give you back, in the case of here, maybe it's like 1% or 0.7% per annum. They give you back 1% or 0.7% per annum. Meanwhile, they're loading out this money to different other guys at 5, 10, 15, 20% per annum. Then they take the other fraction of it and give it to the insurance company. And if you are in the US, it's even a worse Ponzi, because in the US you practice what you call fractional reserve banking, meaning if the bank has $100,000 in its coffers, it can print $900,000. That's what fractional reserve banking is. You can Google it. I'm not lying. So the bank will not keep their own money with themselves, but what we get told as financial education is you need to keep your money in the bank. So these establishments are not going to be happy that all of a sudden you want to take away that power. So there will be a lot of conflicts in this decade and the ones to come because of this. But understand that the trajectory is only going to continue towards digital assets and democratization of money. So MicroStrategy has bought 120,000 Bitcoin now. And what they're trying to do now is to leverage on what you call the Lightning Network. So the Lightning Network, another story I don't want to talk about today, is like a layer 2 network on the Bitcoin network. And the purpose of that network is basically to take the pressure off the Bitcoin network for smaller transactions and enable smaller transactions to go at a much faster rate than it would have on the Bitcoin network. On the Bitcoin network, transactions get rolled over or get posted every 10 minutes on the average because that's the block time. But with the Lightning Network, you can send money on your phone to somebody at the instant. What then happens is, because your phone and that person's phone belong to the same app, for instance, like you send money from internet banking, the person gets the money immediately. There is an internal reconciliation that happens on the Lightning Network. Then at the end of a particular period, every transactions that happen on the Lightning Network gets rolled up in a bundle and posted as a single leg, or not a single leg, as a single posting on the Bitcoin network. So the Lightning Network is like, for the guys who are accountants on the call, it's like a subledger, like a subledger situation where you have postings on the subledger, then you sum it up on the GL later. So the Lightning Network is like that subledger that carries out the transactions within parties. It allows transactions to be faster. So I can give you like three different apps that use Lightning Network. I know, for instance, that what's the name of this guy's app? I've forgotten the name. Come on, this is crazy. What's the name of this guy? I can see the funny thing. I can see the picture of the app. There's a guy. There's a guy that's it's an Egyptian American. Ray Youssef. He's the CEO of that particular company. They have an app that works on the Lightning Network. At least I know three. If not, I'm using my phone on Instagram, I will have checked. I have three apps that work on the Lightning Network. They work like any other app. If you want to send money, you can use QR code to scan and send money to the other party, or you can use their name or their phone number to send money to them. It's the fastest payment setup in the world. It runs on Bitcoin network, but it's a layer two, so it's run at a higher level. And because it's instant, Lightning Network is instant. That was the whole idea, that you don't need to wait for the 10 minutes when the transaction will get posted. You can do your posting across parties and across geographies instantly, and you can get value. And then the network will do is automatically scale up and sum up the interval. This model, by the way, has been replicated even on the Ethereum network. So you have the Ethereum network as a base one or base layer network. You have Matic, you have Arbitrum, you have Optimism, you have ZK Rollup. Those three networks are layer 2 networks that are sitting on top of the Ethereum network. The only intent is to make the Ethereum network less congested and run faster. So Ethereum network now serve as like a summary level. The postings you see there will be like summary level as opposed to microtransactions. So in summary, Lightning Network is handling microtransactions for the Bitcoin network. So a number of hub have been on it, but I think MicroStrategy is going on it, and I think it's going to be huge because not only do they already have market share in business analytics and business intelligence, they have a lot of corporate clients. If they succeed in deploying payments on Lightning in the US, it's going to aid adoption payments of payment system adoption with Bitcoin. I mean, it's going to be very significant. So that's the only news I think, or those are the only news I think of the biggest imports this week. The number of others about the Spain's largest telecom doing a deep dive into Web3. There's going to be a lot of Web3 investment in 2023 for sure, because people will be positioning in anticipation of the next Bitcoin halving. As they show up, I will let you know. For the people that have shown interest in our 2 year roadmap, you will hear from me this week in terms of what next steps are. I think I'm done for the day. I'll take questions if you have questions, either on Instagram or YouTube Live or on Zoom. If there are no questions, I'll be happy to let you go and have a lovely weekend. How about you have a question? Mr. Deneko, didn't you hear about the coins I told you to buy just now? I said I gave you six actually. I said Bitcoin, Binance, Ethereum, Solana, Bitcoin, Binance, Ethereum, Solana, Polkadot, and Matic. If you don't want to do anything, those fives are the safest bets. They are really, really safe bets. Like you don't need to worry yourself. If you want to catch the bottom, you can wait till January or whenever you see the price of Ethereum at 500, that's a good time to buy everything. But if you don't want to wait, you can buy these ones. How about you have your mic hot? Do you have a question before we go?
Yes, Doctor. Good evening. It's been a while.
Good evening. How about?
So our this starting network, though you explain it, but some of us are yet to get a full understanding of it. I think going forward, gradually we'll get an understanding of how the Lightning Network works properly. So some of us like this, is there a way for us to take advantage of Lightning Network, or how do we some of us this particular benefit from this Lightning Network?
Okay. You know what? Let me give myself an assignment. I'll talk about Lightning Network next week. I'll talk about the various application of Lightning Network, and I'll talk about how I think you can position for it. It's not only Lightning Network that will provide opportunities. Actually, I think layer two generally, layer two scale up solutions, and that's why I mentioned Arbitrum, Optimism, ZK Rollup, and Matic. These are layer two blockchains that basically provide. I don't know what I'm looking for a better word to use. They provide an enhancement on the existing blockchain, so they don't. These networks themselves are related and are connected to the parent blockchain. So, for instance, Matic is a layer two blockchain, but it's linked to Ethereum blockchain. So the Lightning Network is a layer two blockchain, but it's linked to the Bitcoin blockchain. The model is slightly different. I don't want to go too much in technicalities. The model is slightly different, but what they are both serving to do is they want to take care of the small volume, high frequency transaction and let the base layer take care of the big chunks. So I'll do some research on some tokens that are using Lightning Network. But most people that are using Lightning Network still defer to Bitcoin. But for Ethereum, the layer so Lightning Network is a layer two network. But for Ethereum, you have tokens like Optimism, Arbitrum, Matic, and ZK Sync. Those are layer two blockchains. Those are opportunities that you can position for. Of course, they're gonna be having super anything that is on Ethereum layer two is gonna you know is gonna pump significantly. I'm gonna write that down too. Ethereum layer two. Should I remember to talk about Ethereum layer two next week? Those are tokens that are gonna pump significantly because, as I said earlier on, a lot of interest is now in Ethereum because of the upgrade and proof of stake transition. So you will have a lot of definitely you have a lot of traction and interest in the layer two solutions. Will Donut Wallet fly? I don't know Donut Wallet, but I will find out about it. If it's a proper wallet, by the way, it will it will progressively get traction. But if it's not a proper wallet, if it's just one of these once in a fly by night apps, then I see that it's already on Apple Store and Apple and Play Store. But yeah, if it's a good wallet and it has good community, it will eventually make some gains. I mean, I can give you an example. Trust Wallet (TWT) did about 20x between the time it started and the peak of the last bull run. Safe Power Wallet did about 15 or 10x. I can't remember. In fact, let me check instead of just these are wallets that only showed up in the last in the last 4 years. Safe Power SFP was not known. Yeah, it was not known before that time. So between the time, yeah, I'm looking at it now. Yeah, it did. Yeah, SFP did like 2x between the time it came into the market and the peak of the market. So it came into the market in February 2021. Before that time, in fairness, it had been on the market, I think, since late 2020 in DeFi space, selling for about 50 cents. So 50 cents to 3.5, not bad. That's like 7x. So if it's a wallet that gains a lot of usage, yes, it will do well. Now, for many other tokens, it depends on it depends on how the token behaves at the time we have Bitcoin halving. So for the one you're asking about for Streak, I'm not interested in that one because there's already a caveat on it, even on CoinGecko, to say that the smart contract can mint new tokens, which means you can get a dump at a very short notice. That's the implication of that. So I don't know about it, but that's the first thing I'm saying about it as you're asking me about it now. It's done 2x, 2.5x from inception this year. Again, I don't know about them. I'm just Google searching them and looking at them. I'm looking at them right now. I don't think I don't think seriously of it, to be honest. Yeah, I don't think seriously of it. As a rule of thumb, let me just say this, even though it's even though it's a record, as a rule of thumb, any any token that is on BSB and doesn't have a serious use case, I take it with a grain of salt. Not because it won't do well, but just because it's very easy to deploy stuff on BNB as opposed to deploying on Ethereum. So if it's on Ethereum, yeah, I might think, okay, maybe there's some seriousness there. But other than that, if it's on BSB, even though BSB as an ecosystem is doing well, uh, no doubt BSB as an ecosystem is doing well, and it's probably going to outperform Bitcoin as well in the next bull run. But just understand that it's very easy, for instance, to clone BNB tokens. It's very easy to create false smart contracts as opposed to Ethereum. It's more costly with Ethereum. It's a lot cheaper with BNB. So just bear that in mind. Um, okay, I think that will be enough for today. We've used up our time. Have a lovely weekend, everyone. Thank you very much for joining, and we'll see you again next week. You should have asked me all these questions before now. Please remember to ask me again next year, next week. I don't want to take up other people's time. So see you guys next week, and have a lovely weekend. Bye.
Bye. Thank you.
Thank you
Cheers.
very much, Doc.
Cheers.